Hello, everyone, and welcome back to our Phillip Trading Podcast. My name is Leo, and today we have Trent with us. He's a senior dealer and he's a product specialist with Phillip Capital. How are you doing, Trent?
Yeah, I'm feeling good today.
Okay, good to hear that. Yeah, so today I think everyone has paid attention to China because China has announced their 10 new measures for dealing with COVID-19. It has accelerated their shift away from the zero tolerance stance that has kept the country isolated from the rest of the world and devastated the economy over the last 3 years. So our topic for today will be as China shifts away from zero COVID policy, is this the right time to enter the stock markets? Okay, so I will ask a few questions to Trent and he will guide us through his view on this China zero COVID policy. Okay, so the first question to Trent is, can you tell us what has been the impact to the China and the world due to their zero COVID strategy?
Okay, so the COVID zero, which includes the widespread testing and sweeping lockdowns deployed to wipe out cases, has been championed by the Chinese government throughout the pandemic, but it has left the China isolated and also caused misery and economic hardship. Okay, it is currently undeniable that China's zero COVID policy has come at a cost to not only the country's economy, but also the global economy as well, given that it is a key player to the global supply chain and functions as an important consumption engine for the world. And manufacturers currently are facing delays in production of finished items for domestic sales and exports because factories in China and warehouses as well are affected by the lockdown and have been forced to halt production and delivery. A slowdown in China's economy would undoubtedly will affect Southeast Asian economies as well via lower demand for goods and services, given that China is actually one of the top trading partner for many countries, including Malaysia. Apart from trade, Southeast Asia also relies heavily on Chinese tourists. This is especially true for countries such as Thailand, which has the most popular tourist destination for Chinese tourists in Southeast Asia prior to the pandemic. Not only do Chinese tourists arrive in big numbers, but they are also the biggest spender among tourists. Therefore, the absence of Chinese tourists has hurt the economies of countries such as Thailand significantly. Prior to the pandemic, the kingdom welcomed about 40 million tourists annually, which is more than 30% from China. So overall, it's mostly negative impact on the overall economy in the world.
Okay, yes, I think we have all seen this impact due to their policy recently. Okay, so so far, what has made the government to shift away from their zero COVID strategy?
Okay, so the China's 3 year adherence to the COVID zero has hit the economic activity, pushing down consumer and so business confidence, and leaving the China citizens stuck in a cycle of outbreaks and lockdowns. Tragic incidents were also blamed on the COVID-19 controls, including a deadly fire in Xinjiang and also intensified public anger. The China state media had painted COVID-19 as fearsome, and Western countries accept it as a moral failing. But as other places moved past the pandemic, a growing number of people started questioning why they were stuck with the China's approach, raising pressure on the authorities. So there were protests eventually spilled out on the streets in cities around the country, with some demonstrators call for Xi Jinping to step down, with an incredible rare scenes of public unrest, given that China is a very populous nation.
Okay, yes, indeed. Okay, so do you see this as the light at the end of the tunnel of the global stock markets due to the easing lockdown in China?
In my opinion, for the longer term, definitely a yes. However, China will still have to endure the transition period. There were expectations that China will loosen up its COVID-19 regime, spur the strongest monthly rally in Hong Kong listed Chinese stocks in nearly 2 decades in November. But the Chinese stock pair all it gains rapidly after an initial rally following the news. it is due to investor actually took profit on concerns lingering about a wave of infections that would likely to come with the reopening measures as seen in the Malaysia economy as well. The China CSI 300 index erased a gain of as much as 0.8% to fall 0.4% as of uh, in Shanghai. So a key gauge of the Hong Kong listed Chinese stocks also reversed course to drop 0.6%. Okay, so this easing actually comes as COVID-19 actually spreading rapidly in China. Cases nationwide surged to highs of nearly 40,000 a day at the end of November before declining. So while the loosened rules will drive the numbers higher again as cold weather intensifies, the government appears to consider the trade-off a necessary one, although it remains to be seen how evenly the changes will be applied nationwide.
Okay. Yeah. So do you have any recommendations or any opportunities in the global stocks market?
Okay, we can actually look at shares of the country's three main airlines, which is Air China Limited, China Eastern Airline Corporation, and also China Southern Airlines Corp, which has all surged by more than 10% in Hong Kong on Wednesday after the news. And also, other than that, tech giants listed in Hong Kong surged 6.6% to reach highest level since September, with the famous video platform Bilibili jumping 22%, and Alibaba Health Information Technology up 16%. Apart from that, the Macau casino operators also led the rally, finishing up 12.2%, sending the quarterly gain to about 46.5%. And also, this is a less favorable counter, which the Chinese real estate developers also added about 3% gains after the China Banks of Communication, BOCOM for short, said it has signed pacts to support the eight property firms, which answer to Beijing's call to ease severe liquidity crunch in the sector. So in my opinion, for the next 12 months, there will be opportunity in consumer-related areas, such as sportswear, restaurants, and travel-related names. However, the market could be still volatile, given the uncertainty during the reopening process. If there are pullbacks, there could be opportunity to add exposure to those reopening names.
Okay, yes. So thank you, Trent. Yeah, so for those who wish to, start to trade stocks or invest in the stocks market, feel free to drop us a message or contact your dealer or reminder, because currently we are having a promotion and this is the last month. So you can open a stocks account with us with totally free, and our broker fee is very low at 0.08%. So grab this opportunity to open a stocks and trade stocks with us. Okay. So yeah, that's it. That is the end of our podcast session for this week. And thank you, Trent, with us.
Okay, thanks, Lau. See you again next time.
Thank you. Bye bye.